Hello, everybody. This is Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool, a.k.a. Mr. Valuation. You know, I often write about dividend stocks, and I obviously always write about value. You know, that's why they call me Mr. Valuation. But even as a value investor, I do like some growth, and I think growth and value go hand in hand if you're really looking to make the most money out of your stocks. So what I've got here for you is a video where I'm going to cover 4 stocks that I found using the FastGraphs preset premium screening tool that allowed me to identify companies that have good growth potential, solid total returns, are reasonably valued, and then can be purchased today with a great deal of confidence. Now let's go into the FastGraph tool, and I've gone under preset screens here. And we've got 2 screens right now that we'll be developing more, where we're looking for growth. And the one I'm working on today, or for this video, is good growth with total return. And that provides persistent, above average growth with double-digit estimated returns and a PEG ratio under 1.5. So with growth stocks, you're looking for the PE ratio equals to growth. So let's go ahead and go into that screen by simply clicking it here. And what I'll come up with is a group of 53 stocks. Now, I'm going to sort this in alphabetical order. But first, I want you to notice that the estimated growth rates here are a minimum of 12% and a maximum of 52%. Okay, the estimated annualized rate of returns go from very high to low of 12.25%, which is still, I would consider, very, very high. Now, I've identified 4 companies out of this list that I really like, and I'm going to go through them with you very quickly here. Number 1, I'm going to look at Assurant, okay, which has had good historical growth and good consistent growth, but our focus here is on the future. It's forecast to grow at over 15% going forward. The company normally trades at a slight premium to the 15 PE that I like, and that would give us like 30% annualized rate of returns going forward with a 2.08% dividend yield. The company only has 32.6% debt to capital. It has an earnings yield of 8%, which I really like, and of course a blended PE of 12. And it is, although I'm forecasting it as a growth stock, it also has a good history of growing their dividend historically over time. The next candidate, it might be one that a lot of you know and some of you might not know, and that's one that I really am attracted to, called Brinks Company. You can see it's a little bit cyclical, but it's got, double-digit growth historically. Since coming out of the Great Recession, I like to call it, growth has averaged almost 13%. Forecast earnings growth is expected to be over 20%, and this company normally sells at a PE of around 18 times earnings, which would mean we could see 53% annualized rates of return out through 2025. We can buy this stock at a very attractive valuation. And I want to focus on that. There are times when the market really prices this stock high, times when the prices drop, but you can see it's consistently going back. And right now, the stock has been on a pretty good momentum streak, and I think it has, really good forecasting. Company has a little bit too much debt, and it's only a double B rated company, but I think all that risk is already priced into the company. The next company is one that you'll all be familiar with, I'm sure, and I've actually done videos on it before, and I think it's really well positioned today. And this would be the very high quality Federal Express. You can see they've gone through some, little bit of earnings lumpiness over the last several years, but earnings are expected to really grow very fast going forward at over 20% a year. You can buy the stock with an earnings yield of 5.79%, which is a little under what I normally like. But that's really based on the fact that the earnings have been dropping. But going forward, the forward earnings yields are going to be much better. And again, the forecasting growth rates for this company indicate that this could be a 25 to 30% annualized rate of return producer going forward. 1.9% dividend yield, 55% debt. So I really like FedEx. And then the last of the 4 here I'm going to look at would be one that I think a lot of you are familiar with. I've also written about this one before. And this is Global Payments. And Global Payments are expected to grow at almost 13.5% a year. You can buy it at a blended PE of 11, an earnings yield of whopping 9%. It has a very low dividend yield, but this is all about growth and only 41% debt. Historically, this is one of the most consistent stocks you'll ever see. The market was pricing it at a premium, through 2020, and then we've since had, the stock come into fair value territory, but you can see it's starting to show a little bit of momentum. And I do consider this stock very, very undervalued here with very, very strong growth. And how I found these stocks was I simply went into our screening tool and I went to the preset screens and I looked for the one that gave me good growth. We've also got other growth stock screens as well. Anyway, this has been Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool. Hope you enjoyed this video. We've got a lot more coming. Our screening tool is currently under development. We originally launched these preset screens, but we're also working on building a much more powerful screening tool. If you're looking for an easy way to invest in stocks, I don't know how you could find anything better than FastGraphs. Thanks for watching. If you liked the video, give me a like, ring the bell, and certainly subscribe to the channel, but even more importantly, subscribe to FastGraphs. Thank you for watching.